Just a short video on GME GameStop's liquidity, just pre-market on the 14th of January. Just having a quick look. This is our time-laid liquidity sentiment indicator. It shows you liquidity at different layers, starting at the forefront of the action today. The heaviest line is the closest, and that first length is measured or amortized over 15 periods. We're looking at the day, so it's measuring the liquidity looking over 15 periods relative to the current liquidity, but it still is the current liquidity. It isn't a moving average. We then put in a series of different time measurements going through to the thinnest line, and the thinnest line is 500 periods of time, and then here again we're looking at the day, so there's 500 periods of time in that thinnest little line here. So we can see areas like this where we've got a large accumulation before we took off here, and we were down at about $20, and we took off, and then we've had another accumulation here. The longer periods of time were less liquid, and we've just squeezed up here towards the $32, $34 mark. And during that time, as we've been rising, it's been becoming slowly more liquid. So green is illiquid, tight, with the buyers or the traders reaching down to the ask, and in the red here, they're taking the bid, and this is loose. And you can see there's different layers of liquidity here. So here, the closest layer here is quite tight. You have to have these periods of building. Now, I've put in this little line here just to show you that we are actually the most illiquid period of time since this bump took off back in April. And so even the longest, the thin line there of 500 periods of time, looking back to the current moment, is very illiquid. Last time we were somewhere similar to that is probably here in August, or here into October. August maybe a little bit closer. We can just see we've got this dropping liquidity here, but dropping into illiquidity here. We might have that sort of scenario here, and that we might get a bit of bumping around, and it might take off some price as well, as we don't have as much dispersion trade going into this period of vol coming off at this apex. We've had a lot of vol spread around over the last week or so, which has taken quite a bit, or the last 2 or 3 weeks has taken quite a bit since the middle of December, when we started to see those Treasury rates rise, or the yields rise, and the Treasury bonds and ETF proxies start to drop their face value. So here, if we just drop into another time zone to see where we are at the moment, if we look at 4 hours, again we can see we are very high. There is one period here. It's about that was about that 17th of October, and again the 2nd of October, where we were in a similar low period in the 4 hourly, and again here just at the closing of that August period. We really need to be dropping into some illiquidity here, otherwise we're going to see some flat movement. The underlying options today, we had lost a lot of the short-dated calls, and we had what looked like traditional hedging in place rather than short selling of calls that looked like people were long calls. Just the associated price movement suggested that those positions were being held long, and the market makers were having to sell the market to cover the options that they had provided. If we have a really close-up look here, this is in the 30-minute, and we can see that we're in a topping period, a very loose period. Here again, we can see this loose period here in close, and we can see that wiped off a bit. That was earlier, later last week. We wiped off a bit of price there, and we see these these very in the 30-minute, these very loose periods dropping into liquidity quite quickly, and that might well happen. Probably not so much, because we just know that in the longer time periods we're still quite loose, and it's going to take a little while to tighten that up. Anyway, I hope that helps where you're thinking about your GME today. Thank you very much.